All right, we are back. We'll send it to our Leslie Picker now at the General Atlantic Investor Summit with a CNBC exclusive interview. Leslie, take it away.
Scott, thank you so much. I'm here with James Gorman, who is a recently added advisor to General Atlantic, the growth equity firm, and of course, chair of Disney as well. Thank you so much for taking the time today. Really appreciate it.
Sure, great to be here, Leslie. Great to be back with you. Been a long time.
Likewise, it sure has. And we have so much to catch up on because a lot has changed since we have heard your perspective. First of all, the market is jumping today because of some headlines from Bloomberg about Secretary Bessent discussing the situation with China being unsustainable as it pertains to this trade war. Do you agree with that? And do you think that the way things are going are unsustainable as it pertains to the economy?
Well, I think that, the tariff trade wars, if you will, have clearly been a shock. I mean, it's reflected in the US dollar, it's reflected in rates in the bond market, and it's reflected in the equities market. So I think the job of the Treasury Secretary, if you will, an additional title would be Chief Marketing Officer for USA. And I didn't see his comments this morning. I don't know if they're in a public forum or not, but I think bringing some sense to investors of what is the end game plan here? Where are we actually heading with this, and what do we expect the outcome to be? Because clearly tariffs have an inflationary aspect to it, and that's going to affect how the Fed behaves going forward.
In the meantime, in your role as chair of Disney, a large multinational company, as well as General Atlantic, you see all the portfolio companies and kind of how they're weathering all of this uncertainty. Do you foresee a recession here, some sort of growth slowdown? What do you think the overall impact of this tariff uncertainty will be kind of on these multinational companies and entities?
It's really hard to predict. I heard this morning that two of my former peers, bank CEOs, one projected treasuries will be around 6% a year from now, the other 3.5%. It's too unpredictable, I think, and that's what you look at the VIX. That's why the VIX is where it is. We're in a world of a lot of unknowns, so predicting whether we end up in a recession or not, it's too early to say that, but certain things are true. One is tariffs are generally inflationary. Two is the Fed is reluctant to cut rates in times of inflation when they have a dual mandate of employment and inflation to control. And three is it's very difficult to know the impact on global trade and what that does to the global economy during this very dramatic shift in tariffs. It's certainly more likely recessionary bent than not, but it's too early to say.
More recessionary than not, and that range that you gave of the interest rates was notable as well. Speaking of rates, one area that's kind of caused some volatility lately is this concern that the Fed's independence could be in question, that its credibility could be in question. Is that something that you're concerned about?
This isn't the first time an administration in this country has disagreed with the Fed. The Fed's job, its dual mandate, as I said before, is unemployment and inflation. It's not to manage the economy. They remain independent, and the role of the Fed chair is an independent role, and I expect that will continue. There'll always be, not in every administration, not in every time, but certainly in times of high economic volatility and uncertainty, there will be different points of view. But the Fed has proven itself to be very patient, absent clear evidence of what to do.